Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In this video, we focus on accounting treatment for sale or disposal of fixed assets and how it impacts depreciation, profit or loss recognition. This lesson covers journal entries, ledger posting and balance sheet presentation under the scenarios when the provision for depreciation account is maintained and when it is not maintained. Through illustrations 7, 8 and 9, various business cases are explained step by step, including the calculation of profit or loss on the sale of fixed assets, preparation of machinery account and provision for depreciation account, and presentation of fixed asset in the financial statements. So sit back, relax and watch the full video till the end. Let us learn how the sale or the disposal of the fixed asset is handled in accounting. An asset may be sold before it is fully depreciated. Depreciation on the asset sold is charged from the beginning of the year up to the date of sales. Sales proceeds and the written down value or the book value of the asset may not be the same. If the sales value of the asset is higher than the written down value of the asset on the date of sale, it is a profit on sale of the asset. Therefore, the profit on sale of fixed asset is equal to the sales value minus the book value of the fixed asset on the date of sale. Now, if the sales price of the asset is less than the written down value of the fixed asset on the date of sale, it is a loss on sale of asset. Therefore, loss on sale of asset is equal to the book value of the asset on the date of sale minus the total sales value of the fixed asset. In this slide, let us learn the accounting entries related to the sale of the fixed asset. Always remember, when the fixed asset is sold, depreciation is always provided up to the date of sales. If depreciation is written off from the asset account, the below journal entry is passed: debit depreciation account and credit asset account. Now, if the provision for depreciation account is maintained, then the below entry is passed: debit depreciation account and credit the provision for depreciation account. Another entry which we need to pass if provision for depreciation account is maintained is that of the provision for depreciation related to the asset sold is transferred to the asset account. Below entry is passed in this regard: debit provision for depreciation account and credit the asset account. Asset sales proceed entry is recorded by passing the below entry: debit cash or bank or the receivables as the case may be, and credit the asset account. If the gain or the profit is earned on the sale of the fixed asset, that means the sale proceeds are more than the book value of the fixed asset on the date of sale. Below entry will be passed in this regard. Three accounts which are affected by this transaction are: first, cash account or bank account or the party account as the case may be. Second account is the asset account, and the third account is the profit on sale of asset account. Cash account or the bank account or the party account as the case may be is debited with the sales proceeds. Asset account will be credited with the book value of the asset on the date of sale, and the profit on sale of asset is also credited with the profit amount, that is the excess of the sales proceeds over the book value of the asset on the date of sale. Now, if the loss is incurred on the sale of the fixed asset, that is the book value on the date of the sale is more than the sales proceeds. In this case, below entry is passed. The three accounts affected by this transaction are: first, cash account or bank account or the party account as the case may be. Second is the loss on sale of fixed assets, and the third one is the asset account. The cash account or the bank account or the party account as the case may be is debited with the amount of sales proceeds. Loss on sale of fixed asset is also debited with the loss amount, that is the amount excess of the book value of the asset on the date of sale over its sales proceeds. And the asset account is credited with the book value of the asset on the date of the sale. Illustration number 7 is on your screens. Tully Trading LLC purchased a machinery for $200,000 on 1st of April 2022. The machinery is depreciated at the rate of 10% per annum. On 1st of July 2024, the machinery was sold for $120,000. Books are closed on 31st December every year. Show the machinery account when the provision for depreciation account is not maintained and when the provision for depreciation account is maintained. Machinery ledger account when the provision for depreciation account is not maintained is displayed on your screens for 3 financial years. On 1st of April 2022, $200,000 worth of machinery is purchased and is posted on the debit side of the machinery account by writing the words to bank account under the particulars column. On 31st December 2022, depreciation for $15,000 entry is posted on the credit side of the machinery account by writing the words by depreciation account under the particulars column. Depreciation for the financial year 2022 is provided for 9 months at the rate of 10% per annum, that is from 1st of April 2022 till 31st of December 2022. Now if we deduct from the total of $200,000 debit side balance, $15,000 credit side entry, we are left with a net asset value of $185,000 as on 31st December 2022 and is shown on the credit side of the asset account by writing the words by balance carried down. Thus the machinery account for the financial year 2022 is balanced. On 1st of January 2023, the closing balance of $185,000 as on 31st December 2022 will become the opening balance for the financial year 2023 and will be shown on the debit side of the machinery account by writing the words to balance brought down. On 31st December 2023, by writing the words by depreciation account under the particulars column on the credit side of the machinery account, $20,000 will be posted being the amount of depreciation charged at the rate of 10% per annum for the financial year 2023. Now if we deduct from the total of $185,000 debit side balance, $20,000 credit side entry, we are left with a net asset value of $165,000 as on 31st December 23 and it is shown on the credit side of the machinery account by writing the words by balance carried down. Thus the machinery account for the financial year 2023 is balanced. On 1st of January 2024, the closing balance of $165,000 as on 31st December 23 will become the opening balance for the financial year 2024 and will be shown on the debit side of the machinery account by writing the words to balance brought down. On 1st of July 2024, machinery is sold and the sales proceeds for $120,000 is posted on the credit side of the machinery account by writing the words by bank account under the particulars column. On the same day on which the machinery is sold, that is 1st of July 2024, depreciation for the period of 6 months, that is from 1st of January 2024, the first day of the financial year 2024, till 1st of July 2024, the date of sale is provided at the rate of 10% per annum and is posted on the credit side of the machinery account by writing the words by depreciation account for $10,000. Now when we deduct from the total of $165,000 debit side balance, $130,000 credit side entries, we are left with a balance of $35,000 which represents the loss incurred on sale of the machinery and is shown by writing the words by loss on sale of machinery account on 1st of July 2024. Thus the machinery account for the financial year is balanced. Machinery ledger account when the provision for depreciation is maintained is displayed on your screens. On 1st of April 2022, a machinery worth $200,000 is purchased and posted on the debit side of the machinery account by writing the words to bank account under the particulars column. Since there is no entry in the machinery account in the financial year 2022, the original purchase value of the machinery will be recorded on 31st December 2022 on the credit side of the machinery account by writing the words by balance carried down for $200,000. Similarly, on 1st of January 23, the original purchase value will be written on the debit side of the machinery account by writing the words to balance brought down for $200,000. And again, same value will be shown on the credit side of the machinery account on 31st December 23 as closing balance for the financial year 2023 by writing the words buy balance carried down for $200,000. On 1st of January 2024, the original purchase value will again be written on the debit side of the machinery account by writing the words to balance brought down for $200,000. On 1st of July 2024, machinery is sold and the sales proceeds for $120,000 is posted on the credit side of the machinery account by writing the words buy bank account under the particulars column. $45,000 being the accumulated depreciation from the date of purchase of the machinery till the date of its sale is transferred from the provision for depreciation account on 1st of July 2024. That is the date on which the machinery is sold. Now when we deduct the total of $200,000 debit side balance, $165,000 credit side entries, we are left with a balance of $35,000, which represents the loss incurred on sale of the machinery, and it is represented by writing the words buy loss on sale of fixed assets on 1st of July 2024. Provision for depreciation ledger account is displayed on your screens. On 31st December 2022, $15,000 will be posted on the credit side of the provision for depreciation account by writing the words by depreciation account under the particulars column. Depreciation for the financial year 2022 is provided for 9 months at the rate of 10% per annum. On 31st December 2022, $15,000 depreciation for the financial year 2022 will become the closing balance and will be written on the debit side of the account by writing the words to balance carried down. On 1st of January 2023, the closing balance as on 31st December 2022 becomes the opening balance and will be written on the credit side of the account by writing the words buy balance carried down for $15,000. On 31st December 2023, depreciation for the financial year for $20,000 is posted on the credit side of the account by writing the words by depreciation account. Depreciation of $20,000 at the rate of 10% on the cost of the machinery is provided for the full year. On 31st December 2023, the accumulated depreciation amount of $35,000, that is $15,000 for the financial year 2022 and $20,000 for the financial year 2023, will become the closing balance for the financial year 2023 and will be written on the debit side by writing the words to balance brought down. On 1st of January 2024, the closing balance of accumulated depreciation for $35,000 as on 31st December 23 will become the opening balance for the financial year 2024 and is written on the credit side of the account by writing the words buy balance carried down for $35,000. On 1st of July 2024, the depreciation for 6 months from 1st of January 2024 till the date of sale of the asset is posted on the credit side of the account by writing the words by depreciation account for $10,000. The amount of $45,000 of the credit side of the account is transferred to the machinery account on 1st of July 2024 by writing the words to machinery account. In this illustration, we will calculate profit or loss on sale of fixed asset under 4 different cases. Tuli Trading LLC purchased a second-hand machinery for $500,000 and spent $50,000 on its repair and another $50,000 for its installation. Depreciation is provided at the rate of 10% per annum by the straight line method. The said machine is sold for $440,000. The books are closed on 31st December every year. Calculate the profit or loss on sale of machine in each of the following cases. Case 1, if this date of purchase is 1st of January 2022 and the date of sale is 31st December 2023. Case number 2, if the date of purchase is 1st of January 2021 and the date of sale is 30th June 2023. Case 3, if the date of purchase is 1st April 2021 and the date of sale is 31st December 2023. And case 4, if the date of purchase is 1st April 21 and the date of sale is 30th June 2023. Let us first calculate the total cost of the machine for all the cases. The total cost of the machine will be $600,000 which is the sum total of the cost of machine, its repair cost and its installation cost. Annual depreciation of the machine at the rate of 10% per annum on the straight line method would be $60,000. Basis information as per previous slide, let us plot the basic information relevant for calculating the profit or loss on sale of machinery. That is the date of purchase, the date of sale and the number of years machine was used by the business before it is sold. This information related to case 1 and case 2 is shown on your screens. The date of purchase in both the cases is same, that is 1st of January 2021. In case 1, the machine is considered to be sold on 31st December 2023, and in case 2, the machine is considered to be sold on 30th June 2023. In case 1, the machine is used for 3 years, while in case 2, the machine is used for 2 years and 6 months. In case 3 and case 4, the date of purchase of machine in both the cases is 1st of April 2021. In case 3, machine is considered to be sold on 31st December 2023, while in case 4, machine is considered to be sold on 30th June 2023. Therefore, in case 3, machine is used for 2 years and 9 months, and in case 4, it is used for 2 years and 3 months. Total cost of machine in all the 4 cases is same, that is $600,000. Depreciation provided on machine in case 1 is $180,000. In case 1, since the machine is used for 3 years and annual depreciation is $60,000, therefore depreciation from the date of purchase, that is 1st of January 2021, till the date of the sale, that is 31st December 2023, will be $180,000. Now if we deduct the accumulated depreciation of $180,000 from the original total machine cost of $600,000, we will get the book value of $420,000 on the date of sale. In case 2, depreciation is provided for $150,000. Since the machine in case 2 is used for 2 years and 6 months, the depreciation amount of $150,000 is the sum total of 2 years of depreciation, that is $120,000, plus depreciation for 6 months, that is $30,000. In case 2, the book value of the machine on the date of sale is $450,000, which is calculated by deducting the accumulated depreciation of $150,000 from the total original cost of the machine of $600,000. In case 3, the depreciation is provided for $165,000. Since the machine in case 3 is used for 2 years and 9 months, the depreciation amount of $165,000 is the sum total of the depreciation for 2 full years, that is $120,000, plus the depreciation for 9 months, that is $45,000. Now if we deduct the accumulated depreciation of $165,000 from the original total machine cost of $600,000, we will get back the value of $435,000 of the machine on the date of sale. In case 4, depreciation is provided for $135,000. Since the machine in case 4 is used for 2 years and 3 months, the depreciation amount of $135,000 is the sum total of 2 full years of depreciation, that is $120,000, plus depreciation for 3 months, that is $15,000. In case 4, if we deduct the accumulated depreciation of $135,000 from the original total machine cost of $600,000, we will get the book value of $465,000 on the date of sale. Now let us calculate the profit or loss on the sale of machine in each of the 4 cases. The sale proceeds for all the 4 cases is $440,000. Now from the sale proceeds, if we reduce the book value of the machine under respective cases, we will get the profit or loss on sale of machine. In case 1, when from the sale proceeds of $440,000, book value of $420,000 is reduced, we will get a profit of $20,000 on the sale of machine. Now in case 2, where the book value of $450,000 on the date of sale is more than the sale proceeds of $440,000, we have incurred a loss of $10,000 on the sale of machine. In case 3, where the book value of $435,000 on the date of sale is less than the sale proceeds of $440,000, we have a profit of $5,000 on the sale of the machine. In case 4, where the book value of $465,000 is more than the sale proceeds of $440,000, we have a loss of $25,000 on the sale of the machine. Another illustration on your screen is following balances are in the books of Messrs. Tolley Trading LLC. Machinery account is having a balance of $800,000, while provision for depreciation account is having a balance of $320,000. The additional information available is on 1st of January 2023, a machine was sold for $200,000, which was purchased on 1st of January 2020 for $300,000. Accounts are closed as on 31st December every year, and the depreciation is charged at the rate of 10% per annum on the straight line method. Prepare machinery account and provision for depreciation account as on 31st December 2023. Let us first calculate the profit or loss on sale of machinery. The original cost of the machinery which is sold is $300,000. Now we will reduce the total depreciation provided for the machinery sold from the date of its purchase, that is 1st of January 2020, till the date it is sold, that is 31st December 2022. It means the machinery is used for 3 years. The annual depreciation at the rate of 10% per annum on straight line method for the machine costing $300,000 is $30,000 per annum. Therefore, depreciation for the machinery sold for 3 years will be $90,000. The book value of the machinery on the date of sales, that is 1st of January 2023, is $210,000. Sale proceeds of the machinery is $200,000. Since the book value of $210,000 on the date of sale is more than the sale proceeds, we have a loss of $10,000 on the sale of this machinery. The machinery ledger account is displayed on your screens. On 1st January 2023, the opening balance of $800,000 is recorded on the debit side of the account by writing the words "to balance brought down." Sales proceeds of $200,000 on 1st of January 2023 is posted on the credit side of the machinery account by writing the words "by bank account." $90,000 being the accumulated amount of depreciation on the machinery sold is also posted on the credit side of the machinery account on 1st of January 2023 by writing the words "by provision for depreciation account." $10,000 being the loss on sale of machinery as calculated in the previous slide is also credited to the machinery account on 1st of January 2023 by writing the words "by loss on sale of machinery account." Now when from the debit side total of $800,000 all the credit side transactions are deducted, we are left with the closing balance of $500,000 shown on the credit side of the account on 31st December 2023 by writing the words "by balance carried down." The machinery account is said to be balanced. Ledger account provision for depreciation is displayed on your screens. On 1st of January 23, the opening balance of $320,000 is recorded on the credit side of the account by writing the words "by balance brought down." On 1st of January 2023, $90,000 being the accumulated depreciation amount of the machinery sold is debited to the provision for depreciation account by writing the words "to machinery account." On 31st December 2023, depreciation on the balance value of the machinery of $500,000 is provided at the rate of 10% per annum. The depreciation amount of $50,000 is provided and the provision is created by crediting the provision for depreciation account by writing the words "by depreciation account." Now when from the total of $370,000 credit side total the debit side transactions are deducted, we are left with a balance of $280,000 on the debit side of the account as on 31st December 2023 by writing the words by balance carried down. Thus, the provision for depreciation account is said to be balanced. In my next lesson on 24th January 2026, we will cover the written down value method of depreciation, explaining how the depreciation is charged on the reducing balance of an asset each year. It highlights the advantages and limitations of this method compared to straight line method. Through illustration 10, learners will understand how to calculate depreciation, past journal entries, and prepare the machinery account over 3 financial years. Illustration 11 demonstrates how to compute the profit or loss on sale of machinery by determining it at the date of sale. This lesson concludes with a comparison between the SLM and WDV method of charging depreciations. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @accounting buddy NB. Thank you and goodbye for now.